Hi fellow traders. I'm now looking at GBP USD, and we have very interesting setup on GBP USD for bearish context as well as for bullish context. So we'll start with 4-hour time frame, and we will discuss about bearish context here first. If you look at this recent development of price from this point to upside, this is looking like this BC retracement, although the length right now is not similar and the price development right now is a little slower, but recently price has accelerated, and if it touches this 61.8% retracement of this recent leg CD, then this will look very similar to BC, and the length will also be equivalent. For example, let's measure the length here. This is the length and the angle of BC, and if we put the same line here, it will look like this. So it's kind of equivalent to this 61.8% retracement. And if price goes here and somewhere around this area, if it makes a bearish candle pattern, then there is a chance that then this can make 3-drive pattern, where this is the first drive, this is the second drive, and third drive maybe like this. This can be a 3-drive pattern, but we look for we will require a candle pattern here just like this, maybe engulfing bearish candle pattern something around here, or other significant bearish candle pattern something around this area for starting of this 3-drive development. Otherwise price can continue to the upside. So this area will be very crucial. Also, if we talk about the classical mathematical things of 3-drive, then retracement should be 61.8% retracement against the previous leg. So this BC was also kind of 61.8% of this AB. Let's measure this here. .618, that is 61.8% of AB. So if I plot this on AB, you can see this previous retracement was also 61.8% of the first leg, the retracement BC, and if this second retracement will also be same, that is 61.8%, this will look very harmonic. AB equals CD is already very harmonic, and this second retracement will be very harmonic. So this will more likely complete this three drive. So all we have to do is to wait for a significant bearish candle pattern here, and then we'll have to take sell position. Otherwise we'll not take sell position, and we will do something else. What else I can show you on daily time frame. So now this is all about this 4-hour time frame. Before we go to daily time frame, let's talk about bullish scenario. Bullish scenario will be there on the chart if and only if price will keep going up and it will go beyond this 61.8% of CD, and this length will become significantly bigger than the length of BC, and then of course we'll have bullish scenario. And similar kind of setup we have on the daily time frame. Let's go to daily time frame. You remember this Gartley, and the story of Gartley is almost over, because the minimum target of Gartley, which is 30% of move from A to D, has already been completed. Any reversal pattern, if any reversal pattern doesn't cause full reversal, it can cause at least 30% retracement against its total move. So the total move was A to D, and this 30% of AD has been already completed. So let's remove the Gartley and now think of the bullish scenario, because this is a bearish Gartley, and the Gartley is in agreement with the bearish scenario at the 4-hour time frame. If we get a bearish candle pattern here, then we'll be in line with this bearish Gartley, and price will be falling further. But now we are talking about the bullish scenario. What happens if price doesn't return to the downside from this area? So that's why we don't need this Gartley anymore here. So let's remove this Gartley. This Gartley was quite mathematically perfect, because D was made on 78.6% of this XA. So just a minute, let me remove this. All right, and here what will happen if price will continue to the upside? We will have a similar kind of pattern, and that is three drive. This will be the first drive from A to B, then second drive is C to D, and the third drive will be from this point to 127% of the total fall from D, 127% of the last retracement. And let's look at previous retracement. Previous retracement was even less than 61.8% of first leg, which is showing that the price was not very, price was reluctant to fall more. Price was tending to go upside. That's why retracement is less. When retracement is less, then there is a more chance of further continuation. Second retracement obviously is 61.8%. You can see 61.8%. Let me remove this word A. It's not AB. Here it is CD. Anyway, let's keep 61.8. So this is 61.8, precisely 61.8% against this CD. So third leg can be mathematically correct if this will go something around 127% of this total move down from D. So this area will be something around 2940, 2941, 127% of the last fall. So this is how it will develop: first leg, second leg, or you can say first drive, second drive is CD, and this will be the final third drive, and the target will be something around here. So how will we determine? We need a movement beyond this 61.8%, and we must not see any significant bearish candle pattern here on 4-hour time frame. Then price should go to the upside, and then there should be a retracement, and then we will enter the position. Because if price will keep going to the upside and we will buy after let's say 50 pips or 100 pips upward move, we will not have much pips on the reward side, which is why we will wait for price to go beyond this area, then return. So what we need is some kind of this kind of development. This is what we need. Not exactly to this point. We do not right now. We do not know which kind of development will take place here. But something like this is what we will require, where the movement to the downside should not be very fast. If this will be very fast, this will make, even after going beyond the 61.8% of this CD, if this movement to the downside will be very fast and this will make some significant bearish candle, then this three drive pattern to the downside will take place. So we have to make sure that this movement to the downside should be slow and should not make any significant bearish candle pattern. Candles sizes of the candles should be smaller than the bullish candles, and then we will look for some bullish kind of candle pattern after retracement. So for bullish scenario, we need three things: one, price should go beyond; second, price should retrace down; and third, price should not make any bearish candle, significant bearish candle on 4-hour. And also a fourth thing, we have to wait for after retracement, we'll have to wait for a significant bullish candle pattern on 4-hour, and then we can enter a buy position, and we can target this area, 127.2% of this move from D to whatever, we can name it A, B, C, D, E, F kind of thing. So this will be the target, 2940. So that's all. And in this case, our stop loss should be right below this. If this price is going to develop like this, so this after retracement, wherever we will enter, we'll have to keep our stop loss below this area, or rather we should wait for a candle closure on 4-hour. If price again returns back, closes below this low, I mean hypothetical, we do not have the low right now, we do not have such kind of price development right now, but whatever low will be made, we will have to wait for the candle closing below this low on 4-hour time frame, and if it happens, we should exit the buy position. So this is for bullish. And if bearish scenario will be developed, then this will be something like this. It will keep going down, then it will be three drive. It can return from here, one second. Yeah, right, it's moving now correctly. So it can return from here. If it returns from here, it will be more probable, more harmonic. Otherwise, even if it goes a little beyond this area, maybe it can return from here, maybe even if here, as long as this point stays below this point C, 3 drive will still be kind of valid. So if it goes beyond or returns from here or any from any point, there will be chances of this downward 3 drive rather than upward 3 drive on daily time frame. So we have to be very careful, and we have to look at the candle patterns on 4-hour time frame. All right, so that's all. And if we get bearish pattern somewhere around here or anywhere below the point C, then we can enter sell. Take profit will be this 127.2. So this is 2280 area, and stop loss will obviously be above this point, or rather we should wait for the candle closing above this point to exit the position in loss. So that's all about GBP USD. Thank you for watching.